All right, let's get right into it. You've heard it 1,000 times, right? Just buy Bitcoin and hold. But what if I told you there was a simple, repeatable strategy that could have actually made you more money? In this explainer, we're not just going to talk theory. Nope, we're going to look at the actual numbers. I mean, it's the big question on everyone's mind, isn't it? When you see the kinds of gains crypto can have, it seems like just buying and holding is an unbeatable play. But then you see those crazy price swings and you think, man, if I could just time this right. So the real question is, can you actually consistently do better? Okay, but here's the hard truth, the part that kind of stings a little. You know the scene, all those complicated charts, the so-called gurus with their secret formulas promising you the moon. But when you boil it all down, the data is crystal clear. Most people who try to actively trade, they would have made more money if they just bought their crypto and then, just walked away. So here's the game plan for today. We'll kick things off with what I'm calling the trader's dilemma. Then we'll introduce a really interesting strategy, get into the nitty-gritty of the rules, and the best part, look at the proof. Stick around because we've also got a bonus strategy for you before we wrap it all up. So let's talk about this dilemma. The thing with crypto is, it's so volatile, right? And that volatility, it's tempting. It creates these moments that look like a golden ticket to quick profits. So people jump into day trading thinking they're going to catch that one big move. But what usually happens? They get burned. Meanwhile, the holders are the ones who often come out ahead. So what's the solution? Well, we're going to dig into a tool that you might have seen before, but maybe never really used, the Ichimoku Cloud. Now, hold on. We're not just going to use it out of the box. We're going to tweak it, modify it for one very specific purpose, to see if we can beat the simple buy and hold approach. Okay, so the absolute core of this whole thing is something called the Kumo Cloud. The easiest way to think about it is like this. It's a big, colored area on your chart that shows you the trend. Super simple rule of thumb, prices above the cloud, things are looking up. It's an uptrend. Prices below the cloud, that's a downtrend. That's it. That's our starting point. And here's the special sauce, the tweaks we need to make. It's actually really easy. First, we declutter. We're going to turn off every part of the Ichimoku indicator except for the two lines that actually create the cloud. Then we make one tiny but super important adjustment. We change a setting called displacement to 1. All this does is pull the cloud a little closer to the current price, which helps us react just a bit faster. And boom, that's the whole setup. All right, our chart is ready to go. Now comes the most important part, the rules. We need these to be crystal clear. No maybes, no what ifs, no gut feelings. Just a simple, mechanical system that tells you exactly when to buy and exactly when to sell. Now, this is key. This is a long-only strategy. That means we're only looking for opportunities to buy. We're not trying to short the market. So the entry signal is a two-part test. First, you need to see a green candle close above the cloud. And second, the cloud itself needs to be green, meaning the green line is above the red line. If both those things happen, you're in. And getting out? Even easier. The second you see a red candle close below the green line of that cloud, you're out of the trade. Simple as that. Okay, this is what you've been waiting for, the main event. Because a strategy is just a nice idea until you run the numbers, right? So that's exactly what the source material for this did. They backtested this exact system on Bitcoin, on the daily chart, all the way back to 2017. And they started with a hypothetical $1,000 investment. So first things first, we need something to compare it to. What's the number to beat? Well, if you just put that $1,000 into Bitcoin back in 2017 and just held on, your profit would have been $16,193. I mean, that's an incredible return by any measure. That's our benchmark. So here's the big question. Did our little strategy, this simple system of rules, actually do better? Could it really beat just buying and, well, doing nothing? And the answer is yes, a big yes. That very same $1,000 traded using our Ichimoku strategy would have turned into a profit of $20,872. We're not talking about a few extra dollars here. That is a huge difference. Let's put that in percentage terms because it's pretty staggering. The buy and hold approach gave you a massive 1,619% gain. But our strategy? It pulled in 2,087%. That's more than 400 percentage points higher, all from following those two simple rules. So you're probably wondering, how on earth did it manage that? Well, this is the really cool part. Believe it or not, the strategy actually had more losing trades than winning trades. But, and this is the secret, the losses were super small. It got you out quick. And the wins, they were gigantic. It just let them run. You've heard that old saying, cut your losses short and let your winners run? Well, this system basically forces you to do that. Okay, but let's be real. Trading on a daily chart takes patience. It's not for everybody. Some of you probably prefer a faster pace, right? So we've got a bonus for you. The source material also outlined a strategy specifically designed for short-term trading on the 15-minute chart.
Now, this one's a little different. It uses a two-indicator combo. Think of it like a team. First, you have the Chaikin money flow, or CMF. That's your filter. It just tells you which direction to even think about trading. If it's positive, you're only looking for buys. If it's negative, you're only looking for sells. Then you have the MACD. That's your trigger. It tells you the exact moment to pull the trigger and get into the trade.
And the rules are just as black and white. If you want to go long, you first check your filter. Is the CMF above its middle line? Yes? Great. Now you wait for your trigger, the MACD crossing up. For a short trade, it's the exact opposite. Is the CMF below its middle line? Okay, now wait for the MACD to cross down. See? Filter, then trigger. That's the whole logic. And this part is absolutely crucial. This strategy comes with a built-in plan for managing your risk. Your stop loss, you just place it below the most recent little dip for a long trade, or above the most recent peak for a short. Then, you set your profit target at 1.5 times that distance. What this does is it makes sure your potential reward is always bigger than your potential risk, which is, just smart trading 101. Okay, so we've looked at two totally different strategies, one for the long term, one for the short term. But what's the big idea here? What's the one thing you should really take away from all of this? It really all boils down to this. Having a system, a set of rules, and then having the discipline to actually follow it, that's everything. A simple rule-based system takes all the emotion, all the fear, all the greed right out of the picture. And as those numbers showed us, a boring mechanical approach can actually produce some seriously exciting results, even better than the amazing returns from just buying and holding. And that kind of leaves us with one final thought, doesn't it? We live in this world of crazy, complicated trading bots, in a constant flood of news and analysis. But what if the real secret, the ultimate trading edge, isn't any of that? What if it's just having a simple plan and the discipline to stick to it no matter what? Definitely something to chew on,